It's such an extensive move today on the equities, even on the dollar index.
Hi again, everybody. Welcome back to the Comstock channel. I'm Marlon Bowling with you. It is so good to have you with us. And we're going to take a look at the market action on Wednesday, the morning after the elections. And of course, by now, everyone knows how the election turned out. And the markets definitely seem to cast their vote for what they think the future holds now. Very interesting times. So to talk about it, I brought on Joe Kemp today. Joe is with Comstock Investments. He's one of the brokers on staff, and I can't wait to hear your thoughts on what the market was telling us now that the ballots have all pretty much been counted. There are a few loose ends floating around out there yet. But big day mainly in the equity markets here. So Joe, explain that one if you could. And the grain markets were lower last night, and then they came back at least to some extent here during the day. So let's start on the equities and work our way through this.
Yeah, the adjectives are seemingly opposing. You can talk about a relatively calm, stable market reaction relative to all of the various risk points here. But big moves, too, to point out because of equities where we should start. We've got a Dow Jones up about 1,500 points here heading into the closing hour. You have the big move for the dollar index one. That's one thing we were signaling in the Comstock report. Traders are saying, watch the dollar for the indication on how the election results are coming in and the feeling of Wall Street in general. And it was a very early march higher for the dollar index. At times then this morning, reacting to the President Trump victory news, you have the index itself up 2 full points, a big leap up. And so far, validating that so-called Trump trade, where the dollar would be higher, where rates would be relatively elevated, where you'd have some reasonable enthusiasm about the fiscal outlook going forward and the overall economic picture, but then some trepidation and some nervousness about commodities and trade. And we observed that as well in the early going with some weakness there. Same could be said for crude oil before an ultimate reversal. A lot of moving parts, and it's not over yet, of course, because we talk about the ramifications lasting well into the future, and in some cases not starting until after the first of the year and the inauguration. But then even this week, we've built it up as not being done with yesterday's election or even today's results realization. It's also the Fed meeting tomorrow and then the crop report at the end of the week to keep things interesting.
It seemed to me that the consensus was that the Fed would maybe lower interest rates, the overnight rates, by 25 basis points again. Do you think they may kind of hold back on that now?
The prevailing consensus is still that we're going to get that 25 basis point cut. It would be announced on Thursday afternoon, 1 p.m. Central, a press conference following that by Fed Chair Jerome Powell. That's one interesting thing to bring up, is going to be the path for the central bank going forward, given that there's going to be a new government's taking place and in the foreseeable future, another Fed chairman and maybe different takes on monetary policy as a whole. But still, by the end of the year and into early 2025, we can see this current bank lower rates. Now, the question is not necessarily as much, will we get a quarter point reduction or not this week? It's the guidance. And will it be that it's down 3/4 of a point since we started, and now we're going to pause and wait and see? That would be a hawkish pullback relative to at least recent Fed meetings, and that's what we'll look for again starting tomorrow afternoon.
So I'm fascinated to see that the Dow Jones Industrial Average was over 1,400 points higher about the time that the grains closed up. And then you had the dollar over, am I reading that correctly? It was like 1,600 points higher. That almost never happens, that they go the same direction. And yet you had the gold just tanking, crashing and burning during the course of the day. And yet you had the corn going up about 8 cents at the end of the session there. And I was just flabbergasted that corn could turnaround from going lower last night to 8 cents higher today on that December contract in the face of a very strong dollar to you.
That dollar we're going to have to keep track of, no doubt, because of it linking into the Fed meeting and everything else still ahead. But the opposite sort of reaction where you did not have the follow through on what the so-called Trump trade would have been, which would be more negative for the grain, something that gives those bearish speculators in Chicago or New York City maybe the green light to step back on the pedal from the short side. Whereas the overall reaction is a somewhat relief, one that is just behind us, and two, that you have maybe sell the rumor, buy the fact type response here because of how much negativity had already been baked into the market largely. And now there's also some general optimism that can we be in a scenario where we don't have the worst case type trade war scenarios unfolding here at the beginning of next year, or if we do have a trade spat with, say, likely China, will it be something that could end relatively quickly and actually to the benefit of our relations? So a lot of open questions there, but more certainty than we had 24 hours ago, for one.
Well, Joe, all I've heard is talk about how if Trump would get elected, there's this fear of tariffs being implemented and everything, but he doesn't take office until January. And the more I thought about it last night, wouldn't that actually lead to almost a run on the bank, if you will, people coming to buy grain in case there would be tariffs put on? Wouldn't that be extremely bullish in the near term?
That could be the case. And you would wonder about the action that we observed with the strengthening actually of spreads to indicate, hey, there's more demand for what can be delivered against, say, the December or the January corn and soybean futures contracts before those potential tariffs could be enacted. And you also have the hedging of getting out into the first part of 2025 and then knowing more about the outcomes likely for the South American crops, which we know China has used to hedge their reliance on U.S. purchases. So it is a point to where it can be really, really positive, and then all of a sudden a long-term worry again. So far it is being expressed in these bullish futures spreads, and likely will be something we can confirm on these regular flash sales announcements as they probably continue to pop up as they have been so regularly recently.
Well, of course, corn and to some extent soybeans are tied to the energy markets. And in the early morning hours, the crude oil market just got squashed. And there has been, of course, a lot of talk about the campaign slogan, drill, baby, drill. If Trump got elected, and they would think that that would lead to all kinds of increasing supply moving forward. Now, it's not like you can flip a switch and just make it all come on board right away. But after over a $2 sell-off, then the market came back, and it was almost unchanged during the course of the day. What is that telling you, again, with the backdrop of what's going on in the Middle East right now as well?
Yeah, pick your risk point, and that's what we saw here today, which is the bears winning out early and the knee-jerk reaction of it all, the uncertainty and the thought of the long-term policy implications, but then the reminder of the elevated tension that we could now have ramping up even further with Iran, and already a volatile influence where Israel and their war on terrorism, the involvement of Iran and Iran's, again, recent vow to retaliate back against Israel. You've got only, unfortunately, a widening of this conflict right now, and the chance that a new president, a second term of President Trump, could help out in the Middle East, like there were examples of in his first term. And then there are other flashpoints, like with Iran, that can drive it the other way, which ultimately was observed at the end of the session with the bounce back off the lows. So crude oil is going to be important, again, not just for what it's saying about the overall commodity space and the attention there by investors, but of course these margins that get back to the renewable fuels and the corn and the soybeans, which are in a roundabout circle back to the political direction. And now the changing view on what to expect for renewable fuel policy under the new administration now, 2025 and forward.
With the dollar soaring the way it did on Wednesday here, I wonder if that is partly what the drag was on the wheat.
That can absolutely be the case, where there had been some signs that U.S. wheat exports were performing well. It can very quickly take you out of competition when you have a spike in the dollar relative to key currencies that are taking up our supply, like Mexico and Japan. Now, that's going to hold true, too, for corn and soybeans to a different extent. But that was the focus more seemingly on the wheat today. It's all going to tie back to that dollar leading the way and giving us the signal. So worth watching for sure.
Before we get into livestock, one more thing on the equity markets today. When you have like a bottle rocket market like that, and it just goes parabolic here on the day after the election, do you think there's a real risk that we could actually be looking at maybe a blow off top in the market just because there is so much fear of a recession?
I think to some extent you can be set up for that. It's such an extensive move today on the equities, even on the dollar index. You can look at it on a chart perspective and see outsized volatility. That doesn't necessarily mean it's got a reverse course right away, but say you tack on another similar set of gains for equities and the dollar into tomorrow morning, and that could be something that's maybe more vulnerable of a turnaround, profit taking, or volatility resettling type of response following us getting the next big event out of the way, which will be that Fed announcement and press conference tomorrow afternoon. So still some time after that for the stock market to trade and close, and for the dollar index as well. So those will be the main things to watch as we see the grains close and then the Fed meeting wrap up after that tomorrow.
Okay, now shifting our focus over to livestock today. Not a bad close at all across the board on live cattle, feeder cattle, or hogs. They were all higher after kind of a meager start, I guess you would say. But I can't help but wondering if the markets would have not traded nearly as strong had it not been for those big moves in the equity markets today. I think that lifted them up.
That's my expectation, that you would not have the strength, but for what we observed with the support spilling over from equities, because this is the flip of what we recapped now, how many months ago? August 1st, 2nd, those first few days of August when the stock market was selling off, in part, you also had the cattle complex in particular pressured by comments by then presidential candidate Harris on price gouging, and particularly bringing up meat prices. And for that to now have a resolution on the opposite end of it, where it's not President Harris, but it's President Trump, and it's a stock market that's not falling out of bed like it was those first 3 days of August, and instead it's a Dow that we're talking about being up, say, almost 1,500 points. So that's the flip of it. It seems pretty simple that the strength there really aided these higher closes.
Well, when you look at the charts, and I'm looking right now at I guess this is December live cattle chart. It did sell off quite a bit here about a week and a half ago. And now the last 3 or 4 days, it looks like maybe it has kind of established a base here for at least a temporary time. It's sitting right on the 200-day moving average, basically. Is that enough to hold it up?
So far, it would seem that the speculators want to use the outcome of the election and what they're seeing in the outside financial markets to maintain and defend their bullish positions in the livestock. And so we're talking about cattle, but that applies to the lean hogs as well. We should note, relatedly, that those commodity trading funds had just reached a new record net long on the hogs, and that it could be the potential goal for them on the cattle as well, knowing that there is still plenty of room up to recent highs. Those all-time highs from last September in many cases were achieved when the Fed net long was just about as large as it is now. And so the thought is, if we build it further back to a record, then we could see potentially, quite a bit of further upside. There's also the caution, though, just fundamentally, seasonally, that we're getting to a point, a really good rally up until recently, and some pushback on the consumer end, and just wrapping up the fall would not also be a huge surprise either. So traders are going to be in between that, and it's going to be a potential cause for more volatility on the cattle, I would say.
The feeders don't look anything like that live cattle chart, though. I mean, they seem to be in a downtrending channel for whatever reason.
No, they never quite had the same recovery out of their early September lows like the live cattle futures did. You had lately, too, maybe the corn strength being a bit proportionally more negative for the feeders than the live cattle futures overall. And on a speculative standpoint, I talk about those speculators reaching big, possibly new records. That's primarily focused on live cattle positions and lesser so, I would say, relatively on the feeders. So right now, a speculative bull market that's fed, by the latest election results, but also one that, is back up on the charts in terms of live cattle that we're also going to talk more about taking advantage of pretty soon, too, from a producer hedging standpoint.
So on lean hogs, what was it, a little over a week ago, they left a big gap on the chart. Did they close that today? Can you tell?
So there were a number of gaps that we were tracking on the hogs, and they did close one to the upside last week, and that would have been the expiration gap left when the October went off the board. Now, one still in place would be the August, and that would take the nearby futures potentially up towards 90. So that's the bullish goal. But as far as there's an up gap where we jumped on the continuous chart over the 20-day moving average, that's right at around 80.82, and it looks like this morning we exactly matched that. So may have just closed that before rallying for a firmer close. That can be evidence of a pretty well supported market there now.
Interesting. Right to the tick?
Right to the tick, it would seem, on this December chart. You have 80.82 matched now from October the 28th.
But it looks like the long-term uptrend so far, even though it's being tested, it looks like it's still intact then.
Yeah, it is. And it looks a lot different. Again, if you bring up the continuous chart where these big expirations gaps are, it shows some of the seasonality and the tendency of the spreads. But right now, the strength of the nearby contract, the firmness of these spreads, the recent trend being up here and new highs for the move, it's a bullish looking market, these hogs.
Interesting stuff. All right. Well, Joe, we covered a lot of ground today. Thank you for joining us as we analyze the fallout after the 2024 election. And I appreciate that. I'm sure we'll be talking again here real soon. Joe Camp with us from Comstock Investments. That'll do it for this episode. For producer Brian Hendrickson, I'm Marlon Bowling. We'll catch you next time right here on the Comstock channel.
Futures trading involves risk. The risk of loss in trading futures and or options is substantial, and each investor and or trader must consider whether this is a suitable investment. Past performance is not indicative of future results.